If you had to define one trait that all successful traders have, you might automatically think great at technical analysis, fundamental analysis, or risk management. But what if I told you there's something that very few people talk about that plays a major role in your success? So most trading systems are very simple. You have a specific set of rules and you just follow them. Easy, right? Wrong. A really great trading system is nothing without context. Having the right context means building the reasons why a market should go higher or lower. You need to understand why you're taking trades and if they actually make sense. So in this video, I'm going to walk you through how I use context and daily bias to frame trade ideas, just like this one that made me $20,000 in a single day. If you're new to the channel, my name's Kyle and I've been trading actively in the markets for the past 13 years. It wasn't until year 8 that I actually became profitable and I made every mistake in the book. But since I found consistency, I've made over $1.3 million in the markets just in the last few years. And if you don't believe me, here's some of the receipts. But that's enough about me, so grab your notebooks and let's get into the video. All right, so we're going to cover daily bias and a couple different things that are extremely important when you're trying to determine the context of the market and why a market should move during specific times or during specific days. When can we expect a market to actually move in the direction that we're anticipating? So first of all, you have to understand why a market is going to move to a specific level. Now, it can either be based on liquidity or we have a news driver or some type of time element. And this is not going to cover weekly profiles or anything like that, which is something that you guys can implement in your own trading, but really just determining why a market should move in a specific direction, right? If we're studying an equities market, maybe they have earnings out, or if we're studying an FX market, maybe we have unemployment claims or CPI, something of that nature. So we have to understand why a market might move. So we're either going to look at liquidity or a news driver. So those two things are really going to be the major determinants on if a market is ready to move higher or lower. And a lot of times when markets go into consolidations, it's because they're waiting on a specific volatility event. Maybe they're waiting on earnings, or maybe they're waiting on a specific news release that is extremely uncertain. So a lot of times when we're trading around CPI, either we're going to get an early move or we might get consolidation leading up into that event. And that's part of the experience that it takes a long time to get because you have to experience it live. There's really no really no way to replicate that experience in a backtesting environment because you're not going to have the same market sentiment. You have to kind of be there in the present to really understand how the market is going to move around these specific events. So just as an example, a couple weeks ago we had CPI, and if that news driver is kind of uncertain, we have to anticipate how the market is going to move around that specific news, because that's going to really play a major impact on our daily bias for the following day and what we can expect throughout the week, which days are going to be good for trading. And this is where I think a lot of traders mess up, is they find a system and they just blindly trade the system regardless of what's happening around them as far as global news or anything like that. So the major key to focus on when you're thinking about daily bias is, what does the actual economic calendar look like? What's going on around the world? How is that market sentiment impacting the actual markets? Because all of those things play a major role in how the markets move. Just as an example, we have elections coming up. Just know that we might go into a period of uncertainty or major volatility, and you have to be ready for that. You have to understand how to participate in markets when we have an event like that going on, and how to really position yourself properly, that way you're not going on major losing streaks when you're trading during uncertain times. All right. So I try to keep daily bias very easy, and this is going to be more of a lecture than anything when we get towards the last couple slides. So really, when I'm just thinking about daily bias, is, does this market have a reason to go higher or lower? Based on a specific calendar or based on specific market structure, right? Are we trading towards specific liquidity? And when can I expect it to trade to that liquidity level or that draw on liquidity? All right. So very simply, we have a liquidity level, and that can either be a previous daily or session high, a previous daily or session low. So if we're looking for bearish price action, typically we would want to see the previous daily or session high be ran out before we get short to trade towards our target. Now, the context behind this really does come from the calendar, and this is something that you're going to have to go in and study yourself. I'm only going to provide a couple examples to you, but the job is up to you to be able to not only do this from a hindsight perspective, but to be able to do this in the future. So even when I'm sitting down to plan my week out, which if you guys haven't checked out some of my videos, I've done a series on how I plan my trading week. Now, when I sit down at at my desk, when I'm planning out my trading week, when I'm trying to come up with my weekly bias, the first thing I do, absolute first thing I do, is look at the calendar, because that is really driving, I would say, the majority of my decision making. So I would say if I had to split up into a percentage, how much of my decision making is coming from the calendar, it's really 70 to maybe 80% of the time is based off of that specific calendar week. So all the events that are coming up, I'm trying to put myself in the shoes of somebody that's, a professional, somebody that is really in tune with what's going on around them, and how these news events impact price action. All right. So this is the model that we're looking for when we're expecting bearish price action on the specific week or specific day, and vice versa if we're bullish. So if we're bullish, we want to see a previous daily or session low be taken out before getting long. And when I get into the example, the entry model or the confirmation is not as important as just getting the direction correct. Because if you have a very strong idea of where the next 24 to 48 hours is going to go based on that calendar, it doesn't really matter what your entry model is. You could have many different systems come out a winner if you get that daily direction correct. That's what the focus of this quick lecture is going to be about, is how do I provide context to the market, and how does it make sense for me to participate in the market, and when should I be looking to manage the position. That is the majority of the energy that I'm putting into the markets, is how do I plan to trade out and how do I manage a trade? Because I've been through situations where planned out the trade amazingly. So first half of the trade goes great. Second half of the trade, I don't know what to do. I don't know when to exit. I don't know when it's going to reach my liquidity level. And then something that blindsides me is just I'm not paying attention to the calendar, and then all of a sudden there's this news event that hits, and maybe I'm up 2 or 3R, and then all of a sudden I'm giving back all the profits because I didn't manage the trade properly. So part of my trading plan is determining, what does the lifespan of this trade look like? How do I plan for that, right? How do I participate in the market as far as execution? What am I looking for prior to that execution? And then how am I going to be able to manage the trade as it progresses? And that, I think, managing the trade as it progresses is really where the bulk of my money is made, because I can't tell you how many times where I was just tunnel vision on the trade itself, not recognizing that there might be a news event coming out or, a time impact. So maybe we're approaching the end of the day or the end of the session, or maybe towards the end of the week. So even if it's on like a Thursday and I'm still holding the trade from earlier in the week, and then all of a sudden we get a Thursday reversal. Right, that's just me being blindsided by something where I should have been prepared for. And that's the context that I'm talking about. And that's what comes with experience. All right, so when we're thinking about a daily model, right, I'm just trying to anticipate how might the week pan out. And this is really, I would say one of my bread and butter setups. So we have Monday, and you guys can see we have Monday's range. And I'll just note that for my trading, a lot of my trading comes towards either the beginning half of the week or the second half of the week. But it's all based on the calendar. Mondays, I usually sit out and just wait for more information. Because as you guys can see, these are two examples where we had Monday's range. We have Monday's high and low being put in place. So this is not, this video, I'm not going to talk about AMD, but we can use Monday's range as our accumulation. So whatever that is, you can dial down and fractalize all this price action into lower time frames. So if you're looking for some accumulation, just use the Asian range. So when we take out the Asian range, right, if you're bearish, just expect a raid on that Asian range high, and then we're going to go the other direction. It's the same thing if you're trying to come up with a daily bias or even a weekly bias. All right. So, talking about the same topic, as far as a month goes, usually the first week of the month, right, is NFP week. The first week can oftentimes be just a leading indicator of what might happen the rest of the month. And NFP weeks are very tricky because at times you might get months where you have the NFP week high and low. So just anticipate this as a weekly candle. This might be NFP week where you get you get this inside bar based on last week. So very tricky. Second week, you're going to get the high of the month being printed. And then the third and the fourth week are going to be your distribution phases. All right. So it's going to start drawing towards the level of liquidity that you expected on a monthly time frame. All right. This is all fractal. It all makes sense if you go in and study your charts individually and come up with these ideas and actually see them pan out over and over again. So just like I would sit out kind of the first week of the month if I was a swing trader, they can be very, very difficult to trade if you don't know what you're looking for. And a lot of times they're very choppy until NFP Friday hits. And I've given back a lot of money, again, just trying to trade ahead of NFP, which doesn't make any sense from a calendar standpoint. Because you have to, and when I'm talking about context and daily bias, you have to be able to put yourself in the shoes of a professional. How many professionals out there, and let's say you're competing against all these other professionals, but they have all this information that you don't have. Essentially, that just means that you're trying to gamble and, I guess front run the market because you think you know better when you really don't. So when you're trying to think like a professional, and let's say if you're managing a fund or if you're trading for a prop firm, a legit prop firm, I'm not talking about some of these online prop firms, retail prop firms, I'm talking about, licensed prop firm that's actually A-booking you and you're trading on a trading floor with a desk and a risk department. How many of them would be participating in markets ahead of an NFP number or ahead of a major news release? Let's say ahead of presidential elections. There's not many. And there's a lot of people that I think in the retail space that think they know better and they can anticipate some of these moves occurring. But the reality is that you're just gambling because you don't know how that market is going to react once that news release comes out. So that's the whole point of being able to sit aside and be patient when it comes time to sit still in the markets. And sitting still in the markets will, oftentimes be first week of the month, possibly NFP weeks, ahead of FOMC, ahead of CPI, things like that. Unless there is some actual context behind it. So if you have a plan, and this is kind of what I'm going to talk about in the following slides, right? This is Monday, and we ran out Monday's high into a bearish fair value gap here. And then in this example, this is Monday, right? And then we ran out Monday's low into this bullish fair value gap. Now, these are the same dates. They're just different assets. The asset doesn't matter. You can pretty much overlay this same thought process into any asset that you want, regardless of what it is, especially ones that are highly impacted by news events, which most global markets are. All right, so when we're talking about global intermarket analysis, a lot of global markets are either running off of some correlated asset, whether that's bonds and yields, whether that's the dollar index, whether it's a commodity. All of these markets have some type of correlation going on, right? If you're talking about crypto, we're talking about, the leaders, which are Bitcoin and Ethereum. If there's major news coming out for those two pairs, right, it's going to have a major impact on the rest of the market. So that's all the context that you need to start building. And I know it's not easy because it all comes with experience. You don't know what you're looking for if you don't have that experience. So when we're trying to plan our week out or our day out, it all comes from our calendar. And those two examples that I just pointed out, right, running out Monday's high and running out Monday's low, came from this specific calendar. So let's just analyze this calendar. And this is where the bulk of my analysis is going into, all of my thought processes behind when I should be operating in the markets, when I expect markets to be slow and consolidating, and how can I plan around this specific calendar and trade in a safe way that is not going to put me at risk of taking on, unnecessary risk or taking losses. All right, so when we look at this calendar, and I do have foreign currencies up here, but you could honestly, if you're trading index markets, you could honestly remove all of this and just only focus on the dollar currency. All right. So when we look at Monday and Tuesday, right, there's absolutely nothing going on. We have Aussie news and New Zealand dollar news. And when I see days or weeks where all the news is loaded toward the back half of the week, and this is what I mean by building context around when I want to operate in the markets or when I should try and be out of my trades ahead of specific news, I'm thinking to myself, all right, well, we have CPI on Thursday, and then we have PPI on Friday. Now, when we only have one news event, like one high impact news event, I'm okay with holding trades through those news events unless it's CPI, unless it's NFP, unless it's FOMC rate announcement. All right. But any of the other ones like GDP or what are some of the other ones that jolts jobs openings, right? Those are some news events that you can trade ahead and after that specific news event. But a lot of times these major ones are really where you have to start, getting your gears in motion and really start thinking about how you're planning your trades out. So when I'm looking at that specific week, I'm expecting Monday to be pretty much a nothing burger. I'm also expecting Tuesday to possibly be a nothing burger. All right, just because we are lining up for a release of CPI. Now, why would I take a trade on Tuesday based on this specific calendar? Well, let me just look into the future and think about what's going to happen tomorrow. So I took a trade on Tuesday on two different pairs, and you guys can go and figure out which pairs I took a trade on. But I'm not going to tell you which ones because I want you to just think with some logic here and actually really put your focus on this calendar, why I'm telling you how I'm operating in the market. Why would I possibly place a position on Tuesday ahead of CPI? Well, if I just look to tomorrow, right, all we have is 10:30 crude oil inventories and then 2 p.m. FOMC meeting minutes. So FOMC is really only a major factor when we have a rate announcement. If we have a rate announcement, oftentimes I will not be trading that day or the previous day. And that's usually when you're going to see moves later in the week occur. But based on this calendar, we have FOMC meeting minutes and then we have CPI on Thursday. So in my mind, if the market is showing me a setup and I still have time leading up until this news event, it's giving me time to be able to get in the position and then manage the trade ahead of that high impact news release. Now, I have some students in my group and, I'm not calling them out or anything because I went through the same thing as well. And I think it's just a great example of not being aware of the calendar. And, some of them are trading during London sessions, but then not realizing that there's a high impact news event coming out during New York. So let's say, just for example, if you want to flip to this week, today is the 17th of October. And let's say if you were trying to trade the euro without realizing that there was a main financing rate at 8:45 a.m. You have to understand that the London session might be manipulation. And that's part of the context and the daily bias that you are possibly just not adding into your trading. We cannot just take a system and just blindly trade it because it's not that black and white. We can't assume that just because you see a setup appear doesn't mean that you have the right context behind that setup. If it's appearing at the wrong time, it's the wrong trade. All right. If it's appearing at the right time, then it's the right trade. So when I sat down at the charts and thought about the trade setup that was appearing in front of me, does it make sense from a context perspective and does it make sense from a timing perspective? So sometimes when we have late news during the week, so maybe Thursday or Friday, and you're going to notice too a lot this happen on NFP weeks, you might get an early run early in the week when we don't have a whole lot of news. And if it lines up with, something that makes sense. So let me flip back to this chart and just take a quick, glance at this calendar and just understand what my thought process was, why I would take a trade on Tuesday going into Wednesday. Because to me, there's a lot of headroom where I can manage the trade and expect maybe an expansion on Wednesday, where I can manage the trade, get in a profitable trade, and then exit by Thursday ahead of all of these landmines. So when I'm looking at the calendar, this is like a major landmine where I don't want to trade. And oftentimes I don't even want to trade after. And then not only that, we have core PPI the following day. So if all of these are considered landmines, especially with PPI falling on a Friday, a lot of times I won't trade Friday either. So just looking at the calendar, I'm trying to be in and out of my trade, early in the week. But I need to see some type of framework for me to get in that trade. So let me just hop back here. This right here is Monday. So based on the calendar, there's nothing going on the calendar Monday. Tuesday, what do I look at when I see the calendar on Tuesday? I'm thinking to myself, all right, well, if the market is possibly predisposed to go higher or lower, Tuesday might be a time where they're going to set it up and make that run prior to CPI. So they're possibly using Tuesday as the manipulation where we get a Tuesday high of week or Tuesday low of week here, right? To make that run higher and then manage the position ahead of CPI. And that's exactly what my thought process was. So with Tuesday taking out Monday's high into a bearish fair value gap, and the fact that Wednesday wasn't threatening. So when I look at Wednesday, this is not threatening at all to me. I'm just seeing Tuesday as possibly being a manipulation to take out Monday's high because my daily bias and my weekly bias was bearish on this pair and then bullish on this pair. The pair doesn't matter, right? It's all about the context. So if I'm, anticipating lower prices in one specific asset, I'm going to be able to manage that trade just till Wednesday. And this is what I'm talking about. When I'm building my bias for that next day, I'm thinking to myself, all right, well, we have FOMC in the afternoon. A lot of times when we get something that sets up on a daily time frame, and this is what I mean, if you see something that just really, really stands out to you that following day, right, Monday, Tuesday, really not a whole lot of price action going on. And we're contesting with this bearish fair value gap. That leads me to believe that maybe Wednesday they're going to make that run, and then it's going to allow me to manage my position appropriately ahead of CPI. So what happened? We got a nice run on Wednesday, right? And this run, you guys can go and study. Pretty much it ran in London, and then we had a continuation in New York. So when I see the market moving my direction during London, then comes the context of, all right, well, am I expecting a New York reversal or a New York continuation? That's all I'm looking at when I'm trying to think about that New York session. And if I'm expecting continuation, I might just hold it through FOMC meeting minutes, which pretty much happened. And then I was able to close towards the end of the day. I believe it was like 3:45 in the afternoon, right around there, right ahead of CPI. And that's all the context that you need. So when this market sets up, right, Monday, Tuesday, a whole lot of nothing. And then maybe you're expecting volatility on Wednesday based on this calendar. Because this is, again, the first time we're going to get dollar news. So the first time of the week we're going to get dollar news. All I need to see is this daily formation, right? This daily formation here, Tuesday's close. And this right there, Tuesday's close. Then all I'm trying to predict is the next 24 hours, right? But it's all based on context. If I didn't have the context of this calendar, it'd be way different. If there was news coming out on Monday or Tuesday, maybe Tuesday wouldn't be the time to trade, all right? And then maybe if we had news on Monday, maybe they were going to see, maybe this was Friday's candle, and then maybe Monday would make the high of the week. It's all based on how this fits into your trade plan and the setups that you're actually seeing, all right? So, operating around the news, in my opinion, is one of the least understood aspects to trading. So let me just, move this down here so you guys can see. This is really, honestly, one of the least understood aspects of trading. And it honestly took me years upon years of studying the markets, because if you were to just take a rookie trader and tell them to trade FOMC week or NFP week or CPI week, they're going to have no idea what they're doing. And it really comes with repetition. How many times have you traded an FOMC week, and how many times have you seen the same conditions pan out over and over and over again? Same thing with CPI, same thing with NFP. It's all about fitting the past experiences that you've had in the markets and just recognizing those patterns. And it's all about pattern recognition, right? And we're talking about pattern recognition. I'm not only talking about trading system patterns, all right? I'm talking about behavioral patterns. I'm talking about these event patterns, how they pan out in the market. Those two things are extremely, extremely important. And when it comes to behavioral patterns, you have to understand, am I an overtrader? Am I impatient? Or, all these different things factoring into my trading. All right, that's a whole different topic. But when it comes to context and daily bias, those are all pattern recognition things. If you've seen this same setup pan out multiple times, and I've seen this same thing pan out numerous times, all right, and I manage it the same way because I've gotten burned in the past by, let's say, me holding through CPI. Let me go back here. This was a great example, all right? Not only that, but this was a great example as well. Even though the market traded in the same direction, let's say if this market moved down and then you didn't move your stop loss or moved your stop loss a little too early. Let's say you entered late, all right? Or CPI maybe just ran the other direction. Those are the things that not paying attention to that calendar is going to have a major effect. And just because this one moved in the same direction, let's look at this one. This was CPI day. All right. This was Wednesday. If I didn't manage the trade ahead of this news event, look what happens. I may have been stopped out at break even. So a lot of times, my trade management decisions come off the back of specific times. All right. Not actual liquidity, because I've given back a lot of profits waiting for specific targets to be hit, and they were just never hit. And if I just went back in time and was able to manage my trades ahead of the next news event, so I'm always thinking about how much room do I have as far as time that this trade can run in my favor before I actually have to manage it, or before I actually have to be worried about it. All right, so when I look at the calendar, I don't have to worry about these two news events because I'm expecting these two to be not high impact. These are not high impact, especially the day before CPI. Everybody's going to be waiting on this number. So, it only makes sense to me that they're going to run the market in one specific direction, maybe catch a ton of people off guard. So let's say if you entered short here, and then CPI ran higher intraday and took out your stop. To me, that makes a whole lot of sense because you get a lot of people that are chasing the market ahead of CPI. And in reality, the way I'm thinking is, all right, maybe they're going to run it and then square all the positions ahead of CPI. That's the mindset that I had with these specific trades. All right. They're going to run it in one specific direction. And when they do, I'm going to try and square my positions off because I don't want to have risk on ahead of CPI. All right. Those are all the types of things that you should be thinking about when it comes to planning your trade. Are there specific landmines that are on the calendar that are going to cause the trade to, see some turbulence, essentially? Or are there specific news events that line up as far as, all right, this makes sense for the market to expand, ahead of this news event or maybe after the news event? It all comes with context, right? And I don't believe you're going to get all the context just from looking at charts. You're going to get a lot of it, yes, but I think understanding the why behind it all comes from the calendar, to be honest. All right, so are there extremely high impact news events scheduled for the upcoming week? CPI, FOMC, or NFP? A lot of times you have to determine based on the current price action. All right, are we expected to see price action move a specific direction ahead of these events or after the events? All right, and a lot of times with, like, say FOMC or NFP, many times it'll come after that specific news event. But I've seen many times where it's moved ahead of the news event. So you have to determine, when do you want to participate? Does it make sense to participate before? Does it make sense to participate after? And the times where it makes sense to participate after is when the price action is not clear. If it's very muddy, if you can't get a really good read on it, there's a reason for it. All right, they're waiting for that specific news event. All right, and there's very rare times where I would say kind of 50-50. There's times where it's easier to understand if the market is going to run ahead of a news event because the price action is very clear. All right. And then when the news event comes out, things get muddy. And then there's times where price action is muddy ahead of the news event, and then things become clear after. All right. So those are the two scenarios that I'm running through my mind when it comes time to plan a trade and execute in the trade. All right. So like I just mentioned, based on the upcoming news events, is price more likely to make a run early or late in the week and before or after the news event release? Those are two major questions that you should be asking yourself when you're building out your high time frame bias, your daily bias, and your context around the market. All right, because you need to build a narrative. There's a lot of storytelling that's being given to you in the charts and in the calendar that maybe you're just overseeing. You're not reading the whole chapter, right? You're speed running through it, and you ever seen those memes where the people are just speed running books and they're just like, going crazy and they're not even really reading it? How many of those people can actually give you the context of that book or that chapter, like, in depth? You have to spend more time and be more diligent in your analysis. And that comes with, right, sitting down and actually planning out your trade, and does it make actual sense? And this is where I think your journals can be beefed up a whole lot, and your analysis can be beefed up a whole lot by having all of these notes in your journals and in your screenshots. So what I would do previously was I would take a snapshot of the trade before and the snapshot of the trade after. And what I would do is I would actually copy and paste the calendar into my chart. So I would take this chart and actually copy and paste it into this. That way I can see how the market is moving ahead of this news event and after the news event. So all I can see is, all right, Monday, Tuesday, a lot of nothing going on, but it's setting up for a run on Wednesday. We have some news that might drive the market, right? And that's exactly what we got. Monday, Tuesday, drove the market. Wednesday, uncertain. Wednesday, look at Wednesday's price action. Pretty much sideways. We had a major wick on both sides of the candle, and look where the market closed. You know? And then on this pair, pretty much anything that was made on Wednesday was all given back. So if you're not managing your trade ahead of that news event, you're screwed. And the only way you're going to learn from that is by understanding I misexecuted in this trade because I wasn't aware of all these things coming up in the following, latter half of the week, all right? If you enjoyed the video but still struggle with your trading and want someone with 13 years of experience to provide you with the right context and daily bias on a week-to-week basis, make sure you book a call using the link in the description. Some of my students have seen massive results just from getting the right guidance. And I'm only looking to work with the most serious traders, so spots are limited. If that's not you, just like this video, drop a comment, subscribe to the channel as I'm dropping free value every single week. So until next time, this is Kyle, signing off.